Hello guys, you're welcome to my channel, and in today's video I'm going to be doing a breakdown of how I was able to catch over 35R on AUDUSD alone just in a space of a month using the MSNR strategy. Alright, so you can see this was the first trade I took. It was a sell, an AUDUSD sell, and this was somewhere around 26th of February. You can see that. And this right here was the second one. That was a 15R, right? And then this here was the second one, a sell as well. And this was 26th of March. So you can see that was just a space of about a month, from 26th of February to this second one was around the 26th of March. Alright, so without further ado, I'm going to get straight into it. And please, if you're new to my channel and you haven't subscribed, please do well to subscribe and also turn on the notification bell so that you can be notified whenever I release content like this and helpful videos like this on my channel. Alright, so let's get straight into it. Right, so this right here is the first chart of AUDUSD, and as we know it, right, the first thing we want to do is to look at the higher time frames. Okay, so starting from the monthly, and from the monthly we could see that price was what, bullish, right, going upwards. All right, and that's all we needed to see on the monthly. And then somewhere here came in contact with this key level. Yeah, this was the first key level that informed my first sell. So I could do what, anticipate some reaction right from that key level. All right, so I moved down to the weekly and then to the daily and the 4-hour. All right, but just before I go into that, all right, just so you can understand what I'm talking about, there are various kinds of key levels, right? We have the MSNR, and they're basically of two types, right? Number one is the support and resistance key levels, and the other is the open and closed key levels, right? So support and resistance key level, for example, this would be a resistance key level, all right, is basically formed, a support or resistance key level is basically formed where there are two opposite candlesticks. Okay, so the key level will be formed at the closing of the very first candlestick. So here we have a bullish candlestick, which is this first one, and a bearish candlestick here. So the closing of this very first candlestick will be our key level. Right, it doesn't matter if this bearish candlestick gapped up here, so long it was a sell candlestick and this was a buy. That's two opposite, right, candlesticks, then this qualifies to be a key level. Same goes for the, okay, and this would be what, an A-shaped key level, right, an A-shaped key level. Whereas this right here, these are two opposite candlesticks. The closing of the bearish candlestick of the very first candlestick would be what, our key level. And you can see in this case the second candlestick, right, gapped down a bit, but it doesn't matter. This closing price is what matters of the very first candle. So that would be what, our key level. That would be what is meant to act as a support, right? So this would be what, a V-shaped key level. All right, then secondly, we have what is the open close key level. It's basically the gap between two candlesticks, right? Either a sell or a buy, right? And in this case, the key level will be what, the closing of the first candlestick. All right, in MSNR, the closing of the first candlestick is always our concern. All right, so, and in this case of a buy, this would be what, our key level. All right, because this first candlestick opened here and did what, and closed here, and then this second candlestick, it's opened here where this same candlestick closed, right, and then started moving up. So that's just the logic behind it. Then I'm not here to teach on key levels properly. I'm just want to show us the trade breakdown. All right, so if you still don't know the basic concept of MSNR, I'm yet to do a video on that, so make sure to subscribe and turn on the notification bell so that you can be notified once I drop that video. All right, so, and I'm going to share with you the specifics of how I use it, all right, personally, and how it has worked for me, all right, so that it can also be helpful, all right, to you. It's not just about picking some random video on MSNR, all right, and just feeding in some garbage. I'm going to be sharing with you how I personally have used it to gain some significant results, okay, and consistency in my journey. So let's go on. Now that we know that, so on the monthly time frame, having identified that key level, let me just show you guys. You can see this was what an A-shaped key level. This was a buy candle followed by a sell candle. So the closing of the very first candle is what our key level. I could anticipate some pullback from there. Now I got a rejection on the weekly. You can see that rejection, and then on the daily, what did I have? I had this first candlestick printing here as a doji, showing indecision, and the second candlestick doing what? Closing downwards. All right, this is like an evening star, so that showed me that we could anticipate sales. All right, that sales could be coming. So what then do we have here? We have this key level here. We're just going to investigate this now on the 4-hour time frame. So on the 4-hour time frame, what did I have? I look for a sweep. I got a sweep and a break of structure. Okay, a sweep and a break of structure. Now, why do I call this a break? Okay, this is a body break, right, and not a full structure break, right? This, as the SMC traders will have it. That's because a full body break is as valid as a full structural break. I'm just going to show you that with the line charts, right? So on the line charts, you can see this as a structure shift. You can see this. So that was a break as well. Yeah. So the moment I saw that, all I needed to see was liquidity. I had this liquidity right here, and then this is a 4-hour key level and also a daily key level, right? Okay, this must have been my prehistoric markups. Yeah, I'm just gonna move that. All right, so you can see that was a daily key level as well, refined to the 4-hour. All right, so you can see on the 4-hour we had a rejection here, and the rule of thumb says 4-hour rejecting 4-hour, look for 1-hour breakout. Okay, daily rejecting daily, you look for a 4-hour breakout, and 4-hour rejecting 4-hour key level, look for a 1-hour breakout. So at this point, we want to go down to the 1 hour and look for a breakout, a market structure shift. Okay, so here we had it. This was the sweep on the 1 hour. Had a sweep. Okay, we had a sweep and a break right here. Sweep and a break. Okay, so that signified to me that price is ready to move, and now I entered then on this key level. So it's key level I entered this being our build-up of liquidity. This was the first pullback after the break of structure. This was liquidity. All right. So, and we even had more liquidity printing very close to our key level. Okay. And I entered for the sell right here, placing my stop loss slightly above this high. Yeah, this high. And then my take profits all the way to the structural low, which was right here. Okay, so here we have it. You can see this is 15.9, but I think my stop loss was slightly above here. The more was just about exactly 15R, so something like this. Yeah, something like this. And you can see what price just came, tapped into our entry and delivered the move all the way down. All right, so I entered off the 1 hour key level here, because on the 4 hour there was no clear key level. It was just all a rejection. Okay, and when the wick is too long, when you're not seeing a key level, a clear key level of the higher time frames, then you can investigate that wick on the lower time frames. Okay, and you can enter off a valid key level on the lower time frame, at most the 1 hour for me. All right, I don't go below the 1 hour. All right, so, and that's why I entered off that key level. You can see that was not the only key level we had. We also had this open close key level right here. This was a sell. This was the key level, the closing of the very first sell candle. Right, the price in between, that was a key level. You can see if you go on the line charts, you're gonna see line chart with markers, right? Line chart with markers. You're gonna see that as a key level. You can see those are both key levels. So that's what we're talking about. But I decided to enter what's off the extreme key level, because entering here was just gonna reduce my risk to reward, right? I was gonna reduce it. So I wanted to enter what's off the extreme key level. Alright, so consider that would have given me a 1:5.72, right, if I had entered off there. But I decided to enter of the extreme, and that gave me what, a better risk to reward. Now this is where some of you get it wrong. Let's say you wanted to enter off this key level initially, and then price came here and started to react from this first key level. You now begin to fidget and you begin to get nervous and you want to just jump into the trade, right? And then maybe you then take your entry from here. See, price has rejected, and you couldn't even be patient enough. You just took your entry from here. Now end up placing your stop loss above here, and then you're targeting this. Then price ends up retracing and stops you out and still tagging the initial point of interest and end up selling. All right, and then later you wonder why it seems you're not profitable. It's not that you're not profitable or you don't know the strategy or you didn't learn it well, but you've not mastered your emotions. You've not gained mastery over your emotion, and that's one thing that separates profitable traders from non-profitable traders. All right, so that's another very important thing. You really need to gain mastery over your emotions. You need to have a very strong mind. Okay, so this is not a psychology class. Just needed to chip that in though. All right, so with that said, let's go on. All right, and so for the second one, this was what I had. This was a break of structure to the upside. Okay, we can see that this key level right here that was violated, this was a V-shaped key level. You can see this is a sell. Okay, sorry, this was an open close key level right here. Yeah, that was violated, so I saw that becomes what, a QM, right? And then it sponsored buys to the upside, giving us a break of structure. So what then do we have? Then we had price pulling back. Normally we should be anticipating buys, right? Because structure was just broken to the upside. But what happened? Looking at the monthly time frame again. Looking at the monthly time frame, we can see what happened. Price just tapped into this key level. You can see that key level right there. Using this as what? As liquidity. Okay, this as liquidity. Tapped into the key level, the monthly A-shaped key level. You can see that now, right? And then we had reactions to the downside. Okay, so on the daily, price did what? Gave us a breakout. This was just like a change in state of delivery. Okay, so you can see that clearly with the line charts, with markers. You can see that was a structural shift. So the moment I saw that, my buyers flipped what? Bearish. All right, bearish. Now this is where the strategy really gets interesting, because unlike like the SMC strategy, where you have to wait for this this low to be taken out, to be broken below. All right, it's not that way in MSNR. Okay, the body break is a valid break. When this key level has been broken below, you already have a valid market structure shift. Okay, so I'm not here to compare strategies and all that. They all have their pros and cons, but I'm just trying to show you the advantages, all right, of the strategy as well. It can also help you to catch earlier and precise entries, okay, more than most strategies out there. All right, but what really matters is what? How good and how well you master any strategy you're using, right? So this is what we had. I could now start anticipating sales. Then what did we have here? This was liquidity X. All right, and this was a daily open close key level, right? And then what do we have? Daily rejecting daily, right? And as well, this could be what? Your candle range high, okay? And then this what? Your candle range low, right? If you also don't know about the candle range theory, I'm going to be making a video on that, how to use it with MSNR. So please make sure to follow and subscribe, all right, so you can always get more value from my channel, all right, whenever I drop it. You do not want to miss it, all right? So this could be our candle range high acting as liquidity. I'm just going to change that to X, and a daily rejection. So here it is. Okay, this was what? A daily key level, all right, rejecting daily, refined to 4-hour key level. All right, so this right here is a 4-hour key level as well. Okay, this is what? A SBR key level. Support broken becomes what? Resistance. All right, so we have that what? As a 4-hour rejecting 4-hour. Then we look for what? 1-hour breakout. Okay, so this was the 1-hour breakout we had. We had multiple breakouts, right? This was a break, this was a break, these were all breaks. Okay, multiple breakouts. So, and you can see that clearly on the line charts with markers. You can see those are all break off structures. You can see that, right? So now that we have that, the next thing we're looking for is what? Liquidity, which we have right here. You can go up to the 4-hour. So this would be our liquidity X, and then our point of interest, okay, would be what? This open close key level right here. This open close key level. So you can see right here. Then this would be my entry, but there's something very interesting about it. Okay, normally my stop loss should go above this external range high, right? And then targets, okay, on this candle range low, right? But here you can see this is a 7.33R trade, right? So how was I able to make this, okay, a 20R trade? Now I'm going to show you. That's from the higher time frames. That's the power of the higher time frames. Even if you decide to go for this liquidity right here, that's to give you a 7.8R trade. Now that's where it gets interesting, and that's why I told you it's not just about watching random videos on YouTube about how to use the strategy, because if that was it, then the most you will probably have gotten from this is what's a 7R trade, okay, or at most a 9R trade. But here I am showing you exactly how I use it and how I maximize it. All right, so here is the interesting part. Here's the interesting part. Now we have our liquidity settled and our 4-hour, right, strong POI. Okay, so the liquidity kind of makes sure that our point of interest is what's protected. Now here's the interesting part. Going up to the daily time frame, we can see that this coincides. There's a daily POI right here, right? There's a daily POI right here. So what did I do? I entered from the daily POI, not even the 4-hour. All right, so this was where I entered from, yeah, from the daily POI, because that's a stronger point of interest, yeah, that could sponsor sales to the downside. And then did what? Gave an 8 pip stop loss. 8 pip stop loss, okay, because the daily is a very strong POI. All right, so once I have a setup like this, all I just need to do is enter from the daily and give it what? A pip stop loss. Then for my targets, all right, I targeted the external range low. Okay, I'm going to show you that now. That is it right here. This is the external range low. So this was now my target, my overall target. And you can see how this moved from a simple 7R trade to over a 20R trade, right? Just somewhere right here. Okay, so that was my entry. This was my entry. All right, it was exactly about 20R, right? You can see this is 19.95 on here. So and that was how I caught this trade. I can see price did what? Came, pulled all the way back, swept liquidity, and did what? And dumped to our final target. And that's basically it on here. If you like this video and you found the video helpful, make sure to subscribe and watch out for more videos like this. I'm going to be dropping a full video on MSNR and how I trade it. Okay, that's the basic concept of MSNR, so you all can learn it and begin to practice it as well. All right, so stay with me. Subscribe, share, leave a comment, like the video, and yeah, and go back and practice as well. All right, see you in the next one.